All right, what's up? Cool. All right, I see it's working well. Awesome. Curious to see how big the delay is. I'm just gonna wait. All right. Up. Cool. All right. Okay, let me pause this here. Alright guys, so I'm just gonna wait for a couple people to join in, then I'm gonna start. What I want to do in this video live is I want to show you one strategy to trade the market live and to trade trending market. So I'm just gonna wait for a couple of people to show up. I want to see how many people we can get here, so I'm gonna wait a few moments and then I'm gonna be able to start. I'm just gonna post this video to a few places right now. That's what I'm doing. So here we go on the page. Cool. So I'm gonna post this video right there. What's that? Cool. So I'm gonna post this to a couple of places and then I'm gonna start in a few moments. I just want to make sure that people are aware of this video, so gonna take a little bit of time, but it's gonna come. Cool. Okay, what's up guys? So if you wanna make sure that you see the screen correctly, I recommend you increase the quality of the video, because I see when it's by default it's not that great, so it's better if you just increase it a little bit. Now I see there's a couple of people in this video, so I'm gonna start right away. What I want to do in this video is I want to show you a simple strategy to trade trending market, and this is a trade I've taken this week. So I'm gonna show you how I took that trade. Basically, the way it works is you have to use moving average in a trending market. So that strategy uses a couple of moving average. I'm just gonna plot all of them. I'm gonna need a few. Cool. So the way it works is you try to see with different moving average what the market is doing. So you're gonna try it with 10 period moving average. Then you're gonna have the 20 period moving average, which will just change color here. And put this one red. Then you're gonna have 50 period moving average. Yeah, just change the color. And then last one. Sounds about right. Cool. So what I'm going to show you in this video is a strategy that I use for trading market, and it works really, really well. I would say the winning rate is about 50%, but when you win a lot. Because I'm going to show you how it works. You basically trade with stop loss. So it's a pretty nice way to benefit from trading market. Now the way it works is you want to make sure that to consider this as a good downtrend, you want to make sure that the 10 period moving average is below the 20 and below the 50 and below the 200. This is how it works. Just gonna see this. Cool. Okay, nice. So that's what you want to do. You want to make sure that the 10 period moving average is below, then you have the 20 above, then the 50, then the 200. Now you want to make sure that you have at least 10 candlestick before you see before you enter any trade. So when the moving average are in the right order, so starting from here, you want to make sure that the candlestick are below the 10 period moving average, meaning this one here, and that they stay below for at least 10 candles. So as you can see, we started here. We have 1, 2, 3, 4, 5, 6, 7, 8. But then we kind of close above. We kind of closed above the 10 period moving average here. So we could not consider this as a good trade right now. We want to have at least 10 below the 10 period moving average. So we start again here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now we have 10 candlestick below. So once we have 10 candlestick below the 10 period moving average, those by the way are EMAs. So what you want to do is you want to sell when price hit the moving average. At that point, price hit the moving average, you would like to sell here. So you would enter a sell order right at that 10 period EMA. Now you would place your stop loss. The way stop loss works is with the ATR. So I'm just gonna add the ATR here. By the way, if you guys have any question, I think you can type your question on the right in the chat box. So if you have any questions, just type them in there, and I'll make sure I see them. I just added 2. Awesome. So the way you would set your stop loss at that point is you would take the ATR. You would look at the value. This is 208 pips per day. Cool. Or no, so it's 20 pip per day. Okay. So the way you would do is you would take that value of the ATR and you would add it to the value of the moving average. So the moving average is at 1.8778. You would add this plus half of the ATR, and you would put your stop loss at that point. Now, don't forget that you have to make sure that the price is below the 10 period moving average, and that the 10 period moving average is below the 20, and it's below the 50, and it's below the 200. Then you can enter a trade. So you would enter, as we said, on the moving average, and then you would simply put your stop loss at half of the ATR plus the value of the moving average. This is a small recap for people who just join in. Now, the way you would do is you would not use any take profit on that trade. The way it works is you basically wait, and every single day you would move your stop loss. So every single day you would recalculate your stop loss based on the value of the ATR. Don't forget to do half the ATR plus the value of the moving average every single day, and you move your stop loss that way. So this is what I did this week. I entered the market exactly here at the moving average. The stop loss was above. Always stop loss is half the ATR plus the value of the 10 period moving average, 10 EMA. This is where you put your stop loss. And then you just trail your stop loss. So second day, you look again at the value of the ATR, which is lower, plus the moving average, which is lower, meaning your stop loss decreases here. And then you do that every single day. So basically, I enter the market here with a stop loss around there. And right now, I just move my stop loss about here, meaning that my profit are locked in, and I can still keep going on that trade as long as the trend continues, which is pretty great. It's pretty nice. So that's basically how that works. So I'm just going to recap for people who just join in. Basically, this is a strategy that I'm showing only for trends, and the way it works is you want to have the 10 period moving average below, and then the 20, then the 50, then the 200. Now, when the moving average are in that order, you want to make sure that price has been below the 10 EMA for at least 10 candles, 10 candlestick. As you can see, we tried the first one. We said here the moving average are in the right order, right? 10, 20, 50, 200. They're in the right order. So you start counting. You want to have at least 10 candlestick below the moving average, below the 10 EMA. So you start here. 1, 2, 3, 4, 5, 6, 7, 8. Now this one closed above the 10 EMA. So you cannot take any trade right now. You have to wait for 10 candles below the 10 EMA. So here we came back below the 10 EMA. Just gonna zoom in a little bit. Oops. Cool. So right here we come back below the 10 EMA. and the moving averages are still in the right order, right? So you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 below the 10 EMA. That's perfect. We can start to enter a trade. We place the N3 at the moving average. So the N3 is right at the moving average here. Just gonna clear a few lines. I think it's gonna be easier for you guys to see. Cool. So you place the N3 at the moving average, as we said. The moving average is here. You'll place the N3 here. As soon as price hit that point, then you can enter the trade. So you place your stop loss, your initial stop loss, at half of the value of the ATR plus the value of the EMA. Meaning if the EMA is at 187.53, about that, you place the stop loss at that number, 1.8753, plus half of the ATR. The ATR is 0.0214, meaning you do half of that plus the EMA, and you put your stop loss. So that would be, I'm just guessing, but that would be around here. Then what you do is every single day you recalculate your stop loss. So there's no take profit here. You just recalculate your stop loss every single day. That technique works only on the daily chart. So you cannot use it on the 1 hour chart. It's only on the daily chart, but it's really, really profitable. Every single day you recalculate your half of the ATR plus the 10 EMA. So second day your stop loss, because the moving average stayed the same, but the ATR decreased, meaning your stop loss would decrease a little bit. Then the next day you do the same thing. Now the ATR increased a little bit, so it's half the ATR plus the moving average. But because the moving average decreased, your stop loss would probably be around here. So basically you do that every single day, and then you decrease your stop loss gradually. So gradually, as long as the trend decreases, your stop loss decreases. So you come to a point where you don't have any risk because your stop loss is below your entry. So you don't risk anything, which is pretty nice. And then that's what happened to me. So I entered the trade at that level here, put my stop loss, just trail a stop loss. Right now I'm down, like I have a couple of pips in my favor, because my stop loss is just trail every single time. So as long as the trend stays, you're gonna make money. You're gonna be in the trade, and you don't have any take profit. Now don't forget that this works only on the daily chart. It's really low maintenance because you have to look at it only once per day, which is pretty nice. So at 5 p.m. Eastern time, you look at your chart, you move your stop loss accordingly, and just leave it like that. There's no take profit. Now this works only on a daily chart. I said it. And the cool thing about this is that as long as there's a trend, you're gonna benefit from it. So you're gonna benefit from the trend. And the forex market is really good for trends, right? When a trend starts, it usually keeps going on for a couple of days, so for sometimes a long time. Don't forget that the order of the moving average is always the 10, then the 20, then the 50, then the 200. You want to have at least 10 candlesticks above the moving average. So what I'm going to do is I'm going to take another example here, because I see there's probably a nice setup right there. We may have been stepped out on that trade, but I'm just going to show you how that works. So you want to have the 10, the 20, the 50, the 200. Once they're in the right order, meaning here, then you start to look for 10 candlestick above the moving average, closing above. So here we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Alright, 10. So once we're at 10, we can start to put an entry at the 10 EMA. 10 EMA, put an entry here. The way you calculate your stop loss, as we said, is the value of the EMA. Here's going to be minus half of the ATR. So the EMA is at that level, 1.9013, and the ATR is at 0.0164. So you do half of this minus the value of the EMA. That puts your stop loss somewhere, I don't know exactly where, but probably around here. Now you would probably have been stepped out in that trade, simply because you would probably have moved your stop loss here. As I said, you trade your stop loss every single day. So every single day you would move your stop loss a little bit above. You probably have been stepped out here, but your loss is still minimal. So you've entered here, get closed out here, which is not that bad. then you would be able to look for another trade setup. Meaning here, the order of the moving average is still good. You're looking to have 10 candle above the 10 EMA. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 above the EMA. So you put your N3 at the EMA. You would enter here. Stop loss, the value of the EMA minus half of the ATR. The ATR is here. So your stop loss would end up, I don't know where exactly, but it would be probably here. The value of the ATR is 0.0167, and the 10 EMA is 1.9377. So your stop loss here will probably be around here. You have to calculate this. You have to be really, really precise. Then you're gonna move your stop loss every single day. So here you can see the moving average increased, and the ATR increased a little bit, but your stop loss will probably be moved a little bit above, and so on. Here, again, it's above a little bit more. And so what happens is you've entered here, you move your stop loss every single day. You never decrease your stop loss. You just move it up every single day based on half of the ATR plus the moving average. That's how you do it. And then you would just move as long as you're in the trend. So I don't know where exactly would have been stepped out. Probably not here. You probably have been stepped out more like when the trend stops. So probably around here. So compared to your risk, this is a huge profit. As I said, like, this is the key of the strategy. You're going to be stepped out often. So you win about 50% of your trade. But the ones that are winners, they're going to be really, really big winner. So they're going to lead to a lot of profit. So that's the cool thing with that strategy. So I hope this video was valuable for you guys. If you have any questions, just type them in the chat box. I think there's a chat box somewhere below this video or something. So if you can just type your question there, I'm gonna answer them. I cannot stay here for too long. But once you've posted your question, I'm gonna answer them, and then we're gonna be able to rock that thing. So as I said, this is a good strategy for trend market only. If you're not in a trend, meaning if you don't have the right order of the moving average, it's not good to trade with that thing. So it's only for trend. Cool. So I'm trying to see how that works. As I said, it's the first time I use YouTube Live, so I'm kind of not sure exactly what I'm doing, but it's still good. So if you guys have any question, let me know. Type them somewhere in the chat box, and then we're going to be able to answer them. Just have to find back this question box here. Cool. Alright, so if you guys don't have any question, just we'll just end it here. But I'm basically going to write a post about this strategy. Now, the best thing you could do is check out DesireToTRADE.com. DesireToTRADE.com. I'm gonna have everything there about the strategy, and I'm gonna write a full post with it. I'm probably gonna do a checklist as well, meaning you're gonna be able to see the checklist, and you're gonna be able to download it for free. So check this out, DesireToTRADE.com. I also have a podcast, so if you want to check the podcast, that's something really great. I think these videos are going to be on YouTube for a couple of days. It's probably going to be public. So if you can subscribe to the YouTube channel, then you're going to be able to see this video as many times as you want. So the concept of the strategy is really simple. The key here is to know how to apply it. It's to know when it works, only in trend markets. So only when you have the right order of moving average, 10, 20, 50, 200. When you have a short trade, it's the exact opposite. So you're going to have 10, 20, 50, 200. And then you want to have at least 10 candlestick below the 10 period EMA. Once you have 10 candlestick below the 10 period EMA, you can look to sell or buy, depending if you're depending the trend you're in. You're looking to buy or sell at the 10 period EMA. So you will be looking to enter when price touches the 10 period EMA. And then you just move your stop loss. Your stop loss is always half of the ATR plus the value of the EMA, the 10 period EMA. So you start by putting your first stop loss, and then every single day you move it. So every single day when the candle close at 5 p.m. Eastern time, you move your stop loss. So you decrease your stop loss if it's in a short trade, and you increase it if it's in a buy trade. So that's how it works. Don't forget that this is gonna work only. It's gonna work only for the daily chart, meaning I didn't test this on any other time frame. I tested it on the daily chart only, and it works about 50% of the time. So you're gonna be right 50% of the time. The rest of the time you're gonna be stopped out. But once you're in the trade and it works in your favor, the reward are gonna be amazing. Simply because trends are usually good and they usually last for a long time in the Forex market. So once you're in a trade and you move your stop loss and your stop loss is below your entry, so you make some profit, you look in some profit, then it's gonna last for a long time. So that's really gonna be really useful for you guys. So subscribe to the channel. It's a pleasure to bring you these videos. I'm gonna keep doing more live video. I like it. So subscribe and check out DesireToTRADE.com, and I'll see you guys soon.